All right. Good afternoon. Just past 12 on today, 24th of July, 2020. And I wanted to give a quick market update. It's been an interesting week. It's been volatile, as I've mentioned over the past 2 weeks, and I think that might continue. All right, so let's take a look at the things that are moving the market and a few of the companies that I am particularly interested in right now. So a good place to start, there are a few websites, media outlets that I look at when I'm trying to get a quick overview of the market. Bloomberg is one, Reuters is another. So you get a feel for what the media says is moving the market. That's not necessarily what is happening, but it's good to know what everyone else is reading. So oil is stagnant, US and China are at it again, the dollar is dropping in price. So things like gold, which are priced in dollars, become cheaper, etc., etc. So let's take a little bit of a closer look at a few more specific items. I'm not sure why, but Firefox is not rendering some of my watch lists correctly, but you can see NASDAQ, SPX, and the Dow Jones are opening down again after a fairly brutal day for the NASDAQ, at least, NASDAQ 100. I think at one point it was down nearly 3%. I think a bigger picture, I had a chart open here, it hasn't actually moved that much. So it's more or less, well, when it opens, it'll be more or less where it was, let's say a week and a half, 2 weeks ago. It's bounced off of the 11,000 mark, which, by the way, if you're gonna try and short something, round numbers are usually the place to do it. And you can see it's lost, let's say, 5-ish% in the past 3 or 4 days, which is okay, 4-ish, 5-ish%, which isn't a big deal in these days of high volatility. I can say this is not the drop I've been looking for. I was hoping for probably a run down to the 10K mark, which I'm still hopeful for, but I don't know if that's gonna happen just yet. So my portfolio is, let's take a quick look. It's net long, as a lot of you will know, but some of the hedges have come into play. So the market is tumbling, but because of those hedges, we're not losing as much as the indexes are losing. So positions, shorts on things like the NASDAQ, SPX, Dow Jones, positions in gold, they're all helping us benefit a little bit, even when there are drops. The idea being that I will close those positions and profit and buy other stocks on the cheap. I'm not sure why this page is taking an age to load. But let's come back to it. So I did want to point out, so I've got nearly 4,000 copiers at the moment, and even with the most recent drop, nearly 90% of you are still in profit. That might, jump around a little bit, but actually I am hoping for a drop. So some of you might see red for a while, but that will only put us in a better position further down the line. All right, obviously we're in the midst of earnings season. Some companies have reported, and you might be scratching your head as to why good earnings, good reports meant that those companies' share prices have tanked. So Microsoft being one. Obviously Tesla posted a profit, a fourth quarter profit, which is good, but all of those stocks are down. So I think there are the wider economic conditions that we need to bear in mind. The US jobless report is not looking good. The US and China might escalate their little trade war. Well, not their trade war, their political tensions at the moment, which might manifest in trade. But also, you might have heard the term buy the rumor, sell the news. So this usually means when the market is anticipating a good event, a good outcome, or maybe a negative outcome, investors tend to buy into it quite a lot and pushing the price up. And then when the news comes out and it's, it's as expected even, then people have already bought everything they're willing to buy. So some people take profits and they leave that particular stock, close out their positions. Others might just hold, buying activity slows down. So this is particularly true of news in general, but also earnings. So people were kind of expecting, some people were expecting Tesla to do well, Microsoft to do well, and they have. So, but they haven't blown people out of the water in terms of their earnings. So people have taken profit. So the prices have dropped a little bit, and it's maybe a good time to get into certain stocks. Although I'm holding back in most instances. I think that some businesses are still heavily overpriced. So the reason that I don't necessarily think the NASDAQ is gonna, that page is still loading, I don't think the NASDAQ's gonna finish its run to 10K right now. It might, but I don't think it will, is because of the upcoming earnings that we have. So we are now on the 24th of July, and you can see these are some of the earnings that I am looking forward to, and these are going to open nicely up today. But a lot of the big companies that drive major indexes, such as the NASDAQ and the S&P 500, for example, Facebook, I think Sony's in the S&P 500, not sure. Apple, Amazon, Google, they've yet to report. So typically the market won't sell off massively before these earnings because a lot of people will be holding the stock, not selling the stock, continuing to hold the stock in anticipation of good earnings. And maybe even because of the percentages that have been wiped off the stock price, they might buy in, seeing this as an opportunity leading up to earnings. I'm not so sure that I would do that, but that is a pattern that you see quite often. So I think it's unlikely we'll see another extension of the biggest drop that we saw yesterday. So I don't know how many of you use investing.com, but I quite like this view. If you've got a portfolio, you can see the performance over the different periods. So you can see in the past week, NASDAQ 100 still, not too bad actually. And year to date, still 21% up. S&P 500, year to date, mostly flat. 1 week, not so bad. So the sell-off hasn't made that much of a dent. I anticipate something quite a lot bigger. It's just hard to call exactly when, but I will continue to hedge until that happens. All right. So Wall Street Journal is another good place to get a feel for the market, although you will need to have a subscription. So jobless claims being one thing driving the market. Gold, people are pouring into gold. I think the more seasoned investors are buying into gold as a hedge, driving the price higher, but also the dollar is dropping in value, so that's driving the price up. So our gold positions are doing quite nicely. All right. And so today, another good place to look is Seeking Alpha. So a bit of information about what's driving the market today. The Asian markets sold off in a big way yesterday because there's a lot of concern about what escalations we might encounter between the US and China and the impact of those. Okay, so a few of the stocks that I am looking at are Apple. So Apple took more of a beating than most. There's a wide-scale investigation of them at the moment. Apple will probably recover from most things. So it's one of those stocks that you want to keep an eye on and jump in when anything shaves a bit of the stock price off. It's still expensive at these levels. I'm not going to lie, but I'm keeping an eye on it. If the market continues to sell off, then I will definitely be accumulating some Apple. Another company that I've been looking at quite closely is Samsung. So Samsung, they make lots of stuff. They're one of their mobile phones are one of the market leaders. But some of you may have heard about the Huawei scandals and how several countries are not going to use Huawei's 5G infrastructure, which is a huge loss for Huawei. So we need to look at the other companies that might pick up the slack. And one of those companies is Samsung. Samsung has, not very quietly, but I don't think it's widely known, but Samsung's 5G infrastructure, R&D and production is one of the best in the world. And 5G, I think a lot of you might wonder why 5G is such a big thing. And it will provide faster internet, which, it's at the bird's eye view, you might be wondering, so what? But the internet is so much fantastically faster that it means that companies that provide things like fiber optic internet, so the internet that runs to businesses in our homes, I think those companies are in danger of being disrupted because 5G is just that fast. So you can imagine if you are Samsung and you successfully your infrastructure is bought by the UK government, you can provide mobile telephony, mobile data, but also suddenly you're able to compete with the likes of Virgin. And you don't need the massive outlays to dig up the streets and lay the cables. Your costs are significantly lower, not only up front, but the cost of maintenance are lower. And all of a sudden you've entered into new markets with new products. So I have an eye on Samsung. Their stock price has has not recovered particularly well through this year, and the prices aren't in dollars, by the way, but you can see that the company is in excellent health. PE ratio is not too bad. Growth is excellent. Earnings growth is a bit lumpy, but tends to be good. They have no debt. They have negative debt. They have a lot of cash on hand. They have a lot of capital. They're an established business. So this could really be massive for them. This could take their business to a complete other level. So that's one company I've got an eye on. I might actually pick up a little bit of that today, depending on how the market fares. Last night, Intel announced earnings, and earnings were spectacular. They beat on revenue and profit by pretty big margins, but the market is punishing them because there is a delay in shipping their next product set. So where was it? Intel's going to open down 13% at least. After this, I'm going to put in an order for Intel because there is a delay, but so I need to be patient, but it means that they will recover eventually. And I've been looking to get back into some of the chip makers recently. So Intel, very good looking business. So price isn't too expensive, excellent earnings growth, revenue growing nicely, profits kind of flat, but some decent growth in the past 5 years. A lot of debt, but their company does require a lot of capital expenditure for the R&D components and the building out whatever they invent. A lot of cash on hand. So I'm keen to get in there. Another, I guess, atypical stock for me is I'm looking at Unilever. They beat on sales recently. I think that there will be a correction in tech stocks. I can't say when, but it feels like it's going to happen soon. And when money comes out of tech stocks, it's going to look for a new home. People don't want to keep cash. They want to put it somewhere where their money can grow. And they might move into defensive sectors. And Unilever is one such business. So I think the PE, the stock is a little expensive right now, but I will keep an eye on them and potentially get in there to benefit from any pivot out of technology into more defensive sectors. All right. And finally, I did share this on my feed. So it's a little deck that you can read through. This image is out of date, unfortunately. It gives you a little run through of my performance. So if you put 100K, copying me in 2015, you now have over $500,000. Something that I like to do that might not always be apparent is I like to balance my view of the market and individual stocks. So I'll always have a bull and a bear thesis. This will be on the market overall and also on individual companies, because it's important to look at both perspectives and then make a judgment based on those. I've also included more or less where I think the market will go through the rest of the year. And if you have any questions on this, I'm happy to take them. Okay, so in summary, I'm happy that the market started correcting. I'm not sure I'm going to buy into the FANG stocks just yet because I think they're still overvalued. I'm looking at a few other stocks that I think might do well through the rest of this year. Some good opportunities there. I don't think the market will extend its correction through the next week because we have some big companies that are reporting earnings, and people are unlikely to let go of the stocks and probably will accumulate them given the sell-off yesterday and today. But I do expect tech to experience something of a correction, a decent correction. I'm hoping for at least another 5%, potentially up to 10%. And then I'll start converting my hedges into more long positions to take advantage of the inevitable recovery that will come. All right, thank you. Have a good weekend. Bye.